I'm Hannah Wallace, reporting for Finextra from the TCF 2018 event in Dublin, where the theme is Digital to the Core. Joining me now is Kanika Hope from Temenos, and we're going to be discussing open banking. Kanika, thank you very much for taking the time to speak with us today.
Glad to be here.
So firstly, what are the different banking business models in the build-up to open banking?
So open banking, as we know, is the global phenomenon arising from the disintermediation of the banking value chain, and the fact that banks now have to necessarily coexist with and collaborate with other players in a wider ecosystem, be they fintechs, be they technology players, be they retailers, telcos, or indeed other banks. And open banking is essentially a collaborative model whereby banking data is shared between two or more unaffiliated parties through the use of APIs for the ultimate benefit of the end customer. And as we know, APIs are the de facto standard in the industry today. So it is leading to the rise of new models from a traditional bank that manufactures its own products and sells them to its own customers. We have three new models emerging. The B2C aggregator model, where a bank sources third-party products and sells them to its own customers. The manufacturer model, where a bank manufactures own products and sells them to other customer-facing organizations, to the B2B platform model, where a bank essentially acts as a market intermediary between multiple distributors and multiple manufacturers. And you see in the UK, the new challenger banks, the Monzos, the Starlings, are essentially hybrids. They're a combination of the traditional and the aggregator model. You have Solaris Bank, which is a manufacturer. It rents its banking license to other fintechs. And you have Rails Bank, which is a platform. It sources banking APIs and sells them to distributors.
Fantastic. And following on from that, what are some of the challenges and benefits for banks from open banking?
So one of the biggest challenges is that it throws open new competition. So open banking invites new players into the banking ecosystem. Particularly the B2C and the B2B models are where the battleground lies. And the reason for that is that the distribution end of the value chain is more attractive. It has the higher returns. And you see a lot of online retailers coming into the space. You know, the Alibabas, the Amazons, the Rakutens from Japan. They're all essentially coming in. They're merging the banking value chains of multiple industries with banking to offer a wide range of products and services to the end customer from a single unified platform. And unlike banks, they are better entrenched into the everyday lives of the customers, and they are better able to exploit the data. Moreover, banks, as custodians of digital data and financial assets, are very worried about cybersecurity and the risks of unauthorized access. And finally, there's the cost of vetting third parties, the cost of maintaining the APIs that you publish. On the other hand, open banking, we believe, opens up new opportunities for banks. They can monetize APIs, they can create new revenue streams on the back of that, they can indeed make a play for the platforms themselves, they can change their role from being mere providers of financial services to being value aggregators, to being advice providers, to being access facilitators. And we at Temenos believe that banks have inherent advantages. First of all, they have the ultimate trust of the end customer. In a YouGov poll last year in the UK of 2,000 respondents, most had not heard of open banking. 90% had not heard of it. And when explained, 60% said they wouldn't share their data with third parties. And similar surveys from Accenture reveal the same lack of trust with third parties compared to banks. So banks have trusted client relationships. They have deep, rich insights that go with that. They have compliance and they have capital. And they can use these advantages to really create value add.
They certainly have deeper roots in the industry. And would you say there are many signs of banks leveraging the advantage they have?
Yes, very much so. So now we believe open banking is becoming a reality with the advent of the revised Payment Services Directive in Europe and other open banking initiatives in the UK and in Germany. A lot of banks are launching concrete initiatives. Nordea, ABN AMRO, and BBVA are all examples of banks that have launched open API marketplaces in recent months, mainly aimed for third-party developers. They have all been well received in the market. Then you have banks that are launching actually customer-facing apps. So KBC Bank, for instance, was the first bank in Belgium to launch a multi-bank app. Similarly, HSBC in the UK launched its Connected Bank app, which invites customers to load products, many banking products, loans as well as deposits from 21 other financial institutions in the UK and get advice from a single app. Outside of Europe, you have initiatives in Australia. You have Macquarie Bank, which also launched an open API marketplace. So this is happening all over the world, not just in Europe.
And finally, Kanika, what would you say are the key technology considerations for banks entering the brave new world of open banking?
So we believe that an end-to-end digital architecture based on open APIs is a necessity, because one of the first things you need is support for open APIs. You need the ability to consume third-party APIs seamlessly and to publish open APIs for third parties to consume in this world, in the world of two-way collaboration. Secondly, and arguably the most important, is security, and multiple aspects of security, from authorization, authentication, access control, consent control, and non-repudiation. Thirdly, the number of queries is likely to go up exponentially once open banking and PSD2 take off, because once customers give consent, you don't know how many third parties are going to knock on your door. Similarly, when you aggregate data from third parties, you're really creating pressure on your systems. So scalability becomes really important. And finally, customers will want near real-time responses to their queries. They want to want instant payments. So therefore, PSD2 and open banking cement the need for 24/7 access and real-time capability. Now, we at Temenos are very cognizant of the fact that our clients may want to follow a whole variety of strategies. And we want to make sure that our technology serves the needs, whichever strategy they follow, whether it is monetizing APIs or whether it is launching platforms. And therefore, we have an end-to-end, front-to-back integrated API-based platform. Moreover, we have a digital marketplace, which in the true spirit of open banking brings fintechs and banks together. And the idea is to basically serve the needs of both. So banks require curation and they require quick deployment, and fintechs require distribution and a development sandbox.
Kanika, this has been great. Thank you very much.
Thank you.
And thank you for watching.